Hello, everyone. Kendra is here, Andrey is here, Aldo and Don, Julian, I see you also. Aldo and Don, you're still like not on visual, and can we just test that you're here?
Yes, now.
And Aldo is not here yet. Okay. So thank you very much. This panel is basically concerning Cayman Island, tax haven, reputation about tax haven, or if tax haven are good for the global economy, or if they are just like basically unfair competition to other countries taking the money, and it's basically there is a lot of bad reputation. There's a lot of things misunderstood. So we want to put clarity on this. I have here a really interesting panel. I would like to give everyone short to introduce themselves. As a first, welcome to Digital Davos 2023. Sorry, I prepared already 2024. It's 2023 in Cayman Island. So I hope to see you also in 2024 at Davos in Davos City. Andrey, I see you for sure. So thank you very much. And let's, like always, start with the women's first. Please, Kendra, can you a little bit introduce yourself?
I'm Kendra Okonski. I've spent about 2 or more decades working in public policy, and most recently worked in the Cayman Islands government for about 3.5 years. Can you hear me okay?
Yes, we hear you okay.
Okay.
Sorry, I'm just like really old. When I go like this, it means I have to look something closer on the computer. Sorry. Or I have to.
So I was involved in a lot of really.
Yes, you will have also this problem.
The problem with Zoom is that, you know, there's visual cues and there's audio cues, and then if there's no audio, then people like interact in a different way. So
Okay.
yeah, so
like
I
this
just
when I do this.
I worked on numerous initiatives in the government, including new legislation, 3 different bills that were passed last year. So it's been a really interesting experience as a sort of expat, and then as a person who also lives in the Cayman Islands and works here. And I've been here about 5 years. So I think that's enough of an intro right now, and then let's have we can get into the details. So.
Hi. I have been working in the fields of compliance. I'm originally from the Cayman Islands, so I don't have to say I've been here for a number of years. And with my years of working in compliance, and also at first I was working in accounts, then they brought me over into compliance. And with my years of doing compliance, it's very interesting, very challenging. Because to get the clients to compel with the regulations, and there are lots, and I'm currently studying right now as well. So there's lots of policies and regulations, and I do see the reason for the tax haven. I do see the reason why a lot of my country is constantly on gray list, backlist, because I'm also very heavily in listening to the policy side of things and how my country can benefit. And my view on things is I would like to see something in place more that would secure my country with the regulations of tax haven. So that's my input there, my little short input. Can you see me?
Yeah, thank you.
Okay. Okay.
Thank you. It's really interesting. Andrey, let's go to you. I see that you promote again Ukraine and your Ukraine front, probably under ChainBLX. Thank you very much. But Ukraine is not a tax haven as much as I know. So tell me from your web and so on, your experience, what you know, and who you are, please.
Sure. Thank you, Karl. Good evening. Yes, I was born in Kiev, which is the capital of Ukraine, but in the 90s I went to New York as an entrepreneur. I started my first company, built it in $1 billion of revenues. But in parallel, 2001, actually, I started my first VC fund with a focus on the Ukrainian origin entrepreneurs building business in the US. So basically, it's my kind of career of being venture capital and the serial entrepreneur. So I've been both sides of the tables. I'm still doing it. But also in terms of the regulation, of course, my fund formation were in different jurisdictions, from the BVIs, Cayman Islands, the Cyprus, and some other ones. But it's kind of my historical background, so I have kind of experience working in different the locations. Coming to Ukraine, this basically would be interesting for you to learn, but I don't want to steal much more time for introduction, and we can discuss it further, because I'm also the chairman of Ukraine Venture Capital Private Equity Association, and we were behind some of the special legal and tax regime, which is currently ongoing in Ukraine, and you will be amazed what was going on there. But for the intro, already kind of done, and looking forward to speak today with my colleagues.
This is exactly why I have you. This would be interesting. You is tax regime and tax regulations, and Kendra from Austrian economics. Much more to discuss later on. Julian.
Hi, I'm an economist based in Cayman, and I was on the editorial board of the Cayman Financial Review, which was a magazine that talked about the nature of Cayman business and the way in which it interacts with the wider world. In the past few years, since moving to Cayman, I've done a fair amount of work on the detail of the way that Cayman operates, which I think is a very different story to the one that is portrayed in the movies like The Firm and other kind of popular media. I can go into some explanation of that in our discussion, but that's me. I'm an economist, been 30 years studying and writing on economic issues of various kinds, and now mainly do work on issues relating to payments, offshore finance, and related stuff.
Thank you very much. Glad to have you here. Aldo.
Thanks.
Hi everyone. Karl, thank you for the invite and being able to participate in this interesting discussion. Background, I've been sort of traveling the world a bit, so I spent a lot of time in a lot of the I would call it tax neutral offshore jurisdictions. I spent a lot of time in the Channel Islands, the Bahamas, Malta, mainland Australia, New Zealand, and sort of spent the last 7 years currently based in the Cayman Islands. What I do day to day is a little bit different than the other participants or panelists. I guess I have a front seat view of sort of fully understanding from an audit and consulting perspective how sort of institutions, high net worth individuals, family offices sort of go about and allocating capital, and sort of where there's appetite and interest, because obviously we see all of that when working with these clients, and sort of just understanding the reasoning behind choosing a location like, for instance, Cayman. And it's not necessarily always because of the tax haven connection, as they call it. Lots of it is just to do with ease of doing business, deployment of capital, and sort of just the regulatory environment being known. Cayman is really, over the last 2 decades, has built up a funds industry that I call sort of the fund mecca of the world. If you just look at the number of mutual funds and private funds that's registered on the island, and the amount of capital that gets deployed from here, to benefit the rest of the world in terms of allocating capital for development of infrastructure, food security, etc., etc. So I'll pause there and.
Thank you. Okay, I start right now not with question related to tax haven immediately, but more from an understanding question which some of our viewers may have. And it's clear. Other governments, they charge taxes, they charge sales tax, they charge local taxes, they charge. And this helps them to pay for schools, for streets, for military, and for everything necessary for the country, for the society to coexist. Now, when you hear that there's a government without any taxes and so on, then it seems like a perpetuum immobile, or something which could be only possible when you start printing money every time, and you probably make tax over inflation, which indirectly Italy did with all the tax evasion. Sorry, no, was just a joke. Don't take it like this. So,
but your question, Karl, is how is Cayman's government financed?
Exactly.
Right.
This is my question.
So it's financed through a mixture of import duties. That's a significant component. So, which is a bit like sales tax, but it's done at the point of importation of goods. There are some other taxes, or you could again duties on goods on island, like tobacco is subject to an on-island duty. But the main source of goods duties is at the point of importation. Then there are fees paid by companies for the ability to operate in Cayman. So you'll pay a registration fee, you'll pay every year, and you'll pay a trade and business license fee if you're a local company. Then there's a fairly large proportion of the revenue comes from work permit fees. So a little bit over half of the population of Cayman, which is now somewhere around 80,000 people, are expats, and most of those expats are either on work permits or on dependency visas, and the work permits range in price from about $500, well, nothing for someone who's working for a non-profit, up to 30-something thousand CI, 35,000 US for a partner in a law firm or accounting firm. So fairly significant funds. I don't have the exact breakdown in front of me, but those are the two main sources of income to the government, and the government has a budget of around $1 billion. So it's not a small amount of income, and that government it provides roads, it provides healthcare for Caymanians, it provides education for Caymanians. So it's a pretty conventional government with a fairly large budget. In fact, it doesn't exist on air, although it does rely to a significant degree on the businesses that operate here, that provide services to people in other countries. The financial services industry in particular is the main source of income in terms of work permit fees. So, and then there's, sorry, I forgot, tourism, which is about somewhere between 7 and 15% of the economy. And that there's also tourist taxes, but they're a relatively small part of the economy, not minuscule, but it's smaller than the financial services.
So, and they are charged by the hotels, or?
Yes, hotels pay a tax, and then there's also a tax charged, or a departure duty charged as well for people leaving.
Okay, so this seems a little bit like protectionism at maximum, like all goods coming in get tariffs on. Everyone who wants to come in from outside has to pay for it, and the own local industry is totally protected to function freely.
I I think that we need to add that the geography of the Cayman Islands is really unique. It's 3 very tiny islands that almost no one can even identify on a map if you don't live here or if you don't know where it is, right? Looks like a speck of dust. It's not a speck of dust in terms of its impact in the global economy, but it has very few resources. And in a very, very short amount of time, about 6 decades, it went from being a very poor nation, relatively, not poor in culture, poor in anything, just economically, started out at the same time as independence as Jamaica and Singapore, and its now per capita income is higher than I think it's on par with Singapore's, and Jamaica is very low, so it's like $92,000 a year. So the exponential growth of that over those decades was entirely due to the development of financial services as an industry because of its poor resource base here. You can't do mining here. The ocean is beautiful and has amazing resources, but they need to be protected as opposed to extracted. Tourism is obviously part of that, but this place is a miracle in a sense because we have amazing infrastructure. And all of that has developed in tandem with the development of financial services. So, and a very sophisticated model of governance that is incredibly stable and very, very, it protects Caymanians, but that's because Caymanians should be the beneficiaries of all of this economic activity that's taking place here. So.
Okay, so Andrey, when you compare different, let's go to this, we see that financial services basically are the driving force in Cayman tourism also, but mostly financial services. So you had different VC funds all over the world. What did you see for difference in the jurisdictions? And probably then our Cayman parties can chime in and say what is the advantage from Cayman?
Yes, well, to answer shortly, of course, from the operational standpoint of view, you look in the speed of the services and the price. Okay, and obviously a lot have changed for the last 20 years and specifically for the last 5 years, because now it's very hard to operate for a number of reasons with all the things that you discussed previously, right? But which are making our life a bit harder because, basically now it's a global competition. And now I would say we're not only looking out for the price of the services, right? But also for the other things attached in terms of the operations, which, as we already discussed before, which has now become a bit of a nightmare for the many the operators to conduct the business, right? Because now the due diligence is not only doing on the GPs of the fund, but on any LPs. Imagine if you have not only institutional LPs, but have the small LPs and or retail investor. So it's makes our life very hard on the fundraising side and also on the execution of the investments, exits, and so on and so on. So basically, it's taking more time, I would say, because historically we pretty much outsourced all of this to the lawyers, and basically we just look at this. Okay, where to sign? Where's the bill? Okay, but now the many GPs around the world, they need to learn, especially the newcomers to the industry, that it's a very complicated world, which is to pity, because basically the idea is like you do the main things, which is making money, you invest, you work with your portfolio company, but you need to actually not to spend a lot of your time or as less as possible for the things which are attached for your operations. Okay, so basically, I would say it's a combined picture of the different things, but any GPs, any investors, they value time. Okay, because the time is our currency, it's our asset. So basically, I would say that any jurisdiction now is competing for the services, but also for the number of the factors But if you look at from the client point of view, it's all about how much time you spend, how transparent it is, and in the end, how much it costs in terms of this compliance. And basically, do you need the people inside your tiny team to actually take care of all of this reporting, etc., etc. So basically, this is kind of broad picture. But if you look at this from our lens, it's all about the how much time you spend and how much it costs.
And how do you think Cayman is doing for this?
Well, I would say the Cayman position,
yeah.
Well, historically and probably now it's a Premier League, right? Basically, especially for the past many years. And believe me, we have also the entities for a number of reasons in Belize or some other kind of exotic islands, etc., which is now harder to operate for the optics. That was already mentioned, this black, gray list. We even don't have a time to keep track of it, especially when you deal with the banks and all of a sudden the BVI is no longer the perceived as a good ones. And you know, it's very changing world. And once again, the reflection is how safe you are from the lens of the banking operations, because you need to not only have an entity, you need to move the capital, because this is what we do. We invest, we get proceeds, you know, all these financial operations that we are involved in. So, and basically, we are kind of becoming hostages of the global financial system that actually, you know, keeping track of our transactions, which are linked to the where you're coming from, if you know what I mean, right? Because every country has their own legislation, all the procedures, etc., etc. So it's all kind of combined in the picture. So from this standpoint of view, the Cayman is positioned in the Premier League, which is perceived still as a good destination to do the business from, and probably because of the Silicon Valley or US funds that predominantly been there. I don't know how it's changing now with the Delaware or the other jurisdictions, but historically, it's still it's a good location. It's a good destination to have a business setting up.
Can we have our Cayman Island guests please comment on this? Because, of course, Andrey uses ChainBLX, and for this, he doesn't have to look at the audits because we help him with it. But it's a little bit more complicated to bring your money to the Cayman than it was before. And it's really not, it's still leading in the world, but there are regulations and rules. Can somebody comment on it, please?
I'd be happy to comment. But so certainly starting in the 1970s, people started to develop fund structures in Cayman just using the company's law. By the 1990s, there was a realization that there was a need for a more formal structure. So the government passed the early funds law. That's gradually evolved over time. It's still fairly straightforward though. So as a structure for putting your funds in a tax neutral environment, it's attractive relative to others. But over the course of that time, there's also been an increase in compliance costs. But that's happened everywhere. It happened early in Cayman, actually. In the 1980s, the US government required Cayman to sign an agreement to disclose the beneficial ownership of entities that were subject to investigation by the US authorities. It was one of the first in the world to do that. And it's really been at the forefront of this kind of compliance since then, having signed dozens of intergovernmental agreements, tax information exchange agreements, and so on. But those, and now it's fully compliant with the Common Reporting Standard, which is an initiative that is part of the OECD's Base Erosion and Profit Sharing Program. As a result of that, costs of doing business have risen somewhat. Although I'm sure you talk to someone like Dawn or Aldo, and they will confirm that although the cost of doing business have risen, it's still highly competitive. And it's highly competitive because it's a tax neutral jurisdiction. That means there is no corporation tax, no capital gains tax here, which means that you're establishing a structure through Cayman where you're pulling funds from different jurisdictions is simpler than if you're doing it in a jurisdiction like Luxembourg, or one of the other European jurisdictions that has the ability in principle to create tax neutrality. And the reason is that they have taxes, right? If a jurisdiction has taxes on corporations, then you have to carve out exceptions, and you have to figure out, okay, where are you paying your taxes to the beneficial owners of the specific entities in each case. So it makes it more complicated. Doing business through Cayman is more straightforward, and it has essentially English common law. It has still a Companies Act that is derived from the original Companies Act. It has a funds law that is enforceable through English legal, the English legal system, with the Privy Council is the highest court in Cayman. So it still makes sense for this explains why the number of funds has been growing in Cayman. The number of mutual funds, the number of private funds has been growing on an annual basis on average over the course of the past 20 years, and it doesn't seem to be stopping. And there's also growth in other areas, in insurance, for example. More insurance captives are structured out of Cayman now than in the past, and going back to the 70s. Creco and other insurance captives have been structured here. So it's a big, very, very important jurisdiction because of the cost effectiveness and reliability of the system. Knowing that your investments are sort of, in a sense, secured by a legal system that goes back hundreds of years and has enormous amounts of precedent is important. Anyway, so that's my booster for Cayman.
Yep.
So I mean, I totally agree there with you, Julian. We are Americans, and we came here over because of the stability of the legal system to make segregate portfolios, which also allowed in Delaware. They were here better and more legally stable. But Aldo, I know you have also to add to this, please.
Yeah, sure. Just to add on to Julian, and sort of just generally all around very interesting discussion. So yeah, definitely agree. Sort of the cost of compliance has sort of increased, but that's pretty much sort of a global phenomenon. I would say that's not specific to Cayman. Ease of doing business, Cayman has been tried and tested. The fund model, if I can call it that, collective investment vehicles, has sort of its early days going back to the early 2000s. And sort of the profession, lawyers, the accountants, sort of industry, government, and the regulator really worked well together to build a product that's attractive for the rest of the world. So, when people think about setting up these structures, sort of Cayman would generally be top of mind, especially also with its location and proximity to the US, and more recently, sort of Latin America. There's been a lot of development and traction, sort of emerging growth opportunities. So cost of doing business is it's high, but it's competitive with other jurisdictions. And another interesting sort of observation is it's not just that Cayman is tax neutral, but I think politically it's also a neutral environment, which, just given the current environment that we're in, a lot of, high net worth individuals and family offices find that attractive and appealing. Sort of not having that target on their back per se, but being in a location where it's neutral. It's not favorable to any sort of nationality necessarily, or a specific country that you may be from. Granted that there's lots of compliance and obviously sanctions and all of that, and Cayman is fully compliant, and all these sort of relevant recent developments, and making sure that we do honest business on the island, and we attract the right money and sort of the cream of the crop, if I may call it that, in terms of getting funds here and allocating it to various needs. I've just seen a lot of interest and appetite over the last 12, 18 months of family offices having a sort of a keen and close eye on Cayman and looking at it as a very sort of appealing and attractive location to potentially re-domicile or move some of their operations here. And then more sort of on the canary in the coal mine, the digital asset side, and I won't go into too much on that. But there's a lot of uncertainty, especially in the US and sort of mainland specific in that area. So we've seen quite an uptick in inquiries, again, at Cayman offshore jurisdictions where these investors, allocators are looking for neutral jurisdictions where the regulations and the rules are sort of clear, there's clarity, and they know there's not going to be sort of backdated, reverse engineered, laws that's going to be applied to them. We're also very progressive. The economic zone of Cayman Enterprise City comes to mind. Sort of lots of innovation, technology, incubation. We see a lot of projects and people sort of finding that attractive. And that also has a model with Charlie Kirkconnell that makes the ease, again, of doing business and sort of a fast track of setting up an entity and an organization, more sort of the operating multinational type of entities, and getting work permits and that in a relatively quick sort of time frame, which again I think just demonstrates that the business community on island is really progressive, forward thinking, and always thinking of ways that we can innovate and sort of improve the speed of doing business, which again is really crucial for sort of the type of people and businesses that we attract to the islands.
Thank you. So I would like to have also Don and Kendra adding to it. I just want to see, we have like 10 minutes left. So I want to also go directly from this question to my next question. So I tell that everyone is prepared for this. And we will go over to basically why is a tax haven like Cayman Island good for the other economies, or not only bad as an extraction point of money, and basically speaking about what is a benefit in the global economic system to have something like this. But first, please, you can answer when you have to add something, Don and Kendra, to this, what we just discussed, or you want to start with the new questions. Please feel free. You didn't have speaking time yet.
Okay, I haven't got a chance yet, so can I go ahead?
Yes.
Yeah. Okay. So with me dealing with my clients and doing, and like you said, you're asking about taxes. So first of all, I can speak on from my own personal experience and from my clients. If they have to open an account and the structure that we have here in place in the Cayman Islands for them, it's very clear. It's very easy. It's very safe. And they know they're not being taxed. And then you have a lot of clients that are also retired. So after they do form their operations here, they'll look into, okay, can we retire in the Cayman Islands? And it's fine that it's very low crime. It's a very safe place. So there's a number of combination of things that is offered for them. And we're not finding a decrease because the government is implementing more and more regulations, and we're keeping up. So we're very much offering a service that is growing more and more, and it's growing not just in the offshore, it's actually within the locals as well, because everybody has to do their compliance, and we don't pay taxes, but like I say to many of the people, we're indirectly taxes because 95% of our operations are imported. So therefore, that's where the government is collecting from, and our structure of other operational costs are fees that they collect in order to operate. Given those are the costs that our clients coming here on board, and we're not limited to certain nationalities. The other guy spoke and said we had like a population of 80,000. We actually have a population of 120,000 now, and it's growing. So yeah, with that, I just wanted to say the tax haven is that we have here offers a lot for our offshore, and it's just growing tremendously. So I wanted to say that part first. And the next question, I'm going to get something more. So Kendra can go ahead.
I was just going to add to that I think, or segue, I guess, that I don't use the term tax haven because I think it's very pejorative and doesn't, it's a term that's been invented by someone else. So if you ask people about the Cayman Islands and they say it's a tax haven or they say it's a beach paradise, there's nothing in between there usually that fills in the understanding of what the jurisdiction is, what is its contribution to the world, and what is the counterfactual, right? So if these types of funds that are domiciled here, or indeed the captive insurance industry weren't here, what would it look like in the world? Nonprofit hospitals in the US may not be able to find insurance for themselves. So by having a captive, maybe we're helping people that are less fortunate people in the US to avail of healthcare by driving down the cost. Now, we can say all sorts of other things related to that. I'm just looking at what's the counterfactual? What are the infrastructure projects around the world that wouldn't come into existence and wouldn't generate tax revenue for those governments without the capital that's being pooled here? So this place is innovative in a different sense than what we often think of as innovation by looking and saying, well, what are these legal structures that can be created? And how can we retain our high standards in enforcement of those things and continue to evolve, right? And the evolution of the free society and free markets has been underpinned by that specific evolution of nuanced precedent in law, like the common law throughout the Commonwealth, being able to, and being a bit more nimble than other places and being able to advance on that. So I think those are really important issues at the top of my mind. We don't have time to go into a terrible amount of detail here, but they're worth continuing to think about how we all talk about it and avoiding this pejorative term, and just tax neutral is a good way of discussing it, I think. So.
Okay, thank you. Somebody else to this extent?
Yeah, happy to chime in. Yeah, I just think adding on to Kendra's sort of summary, it definitely offers an opportunity. It provides capital inflows to onshore locations where that can then be utilized for whatever the need is in that specific country or priority. And with that, it's not entirely an entire loss of tax or income tax revenue in the onshore location, because this capital inflows then leads to increased economic activity, right? GDP, more people get employed, more people get jobs, they have a salary, they pay tax on that. More people go to the grocery store and spend money there. A lot of countries have VAT, GST, value-added taxes on a lot of goods. So it's not just all negative. There's actually a lot of benefit and positive impact on these locations from that perspective. And even like if you look at from a tax neutral sort of flip side of the coin, tax neutral jurisdiction, okay, let's say Cayman invokes or imposes a personal income tax of whatever the percentage may be, that third country is not going to benefit from that. That benefit is going to lie with the Cayman Islands. And it's actually going to reduce the benefit to the onshore location, because if there's a tax here, then there's less capital to go out, right? Because you need to factor in that expense, which is now a tax expense. So it's a really delicate balance to strike. But I would say I would sort of look at this as, from a tax perspective, we cannot like think of a one-size-fits-all model, right? So different countries, different jurisdictions is going to have like different models that works for them. And I see the Cayman model as being, instead of an income tax, you have a consumption tax. So, and the benefit of that is users, participants in the economy can actually decide what they spend their money on, because the import duties is 40, 60, sometimes 70% plus on goods that comes into the island. But as an individual, I have a choice on what I spend my money on and sort of how much tax I pay, rather than having sort of a flat tax rate that somebody imposes on me and the money doesn't even necessarily go to where it's meant to be. So I think it's sort of a really delicate balance that needs to be struck, but also just being considerate from a global perspective that, you know, maybe trying to get a one-size-fits-all type of scenario isn't necessarily the right answer. And we need to consider all these. Conscious of time, so just
to go to the final round questions. So we also know here, all on the panels, we are aware, and just I repeat it for the audience, there's also a misconception. You bring the money to Cayman and you don't pay taxes. You're an American citizen. We will report over the GIN number to the government in America, to the IRS. And when you bring the money back, of course, you will have to pay your taxes. So it's not tax avoidance, which you do here. It's you just pay the taxes in Cayman Island as long as you are doing business here, or you have your money here in a fund. But it is not that it's a person which hides your money under the mattress, and it's just like something like this. So there is basically, and this goes to my last question. We know that there is already a lot of regulations between, for example, the United States or Europe with Cayman Island, with disclosure, for example, bank account disclosure and so on. But what cannot be taxed here in Cayman Island, what can be taxed on the Cayman Island? Why do you think that the political system often uses attacking Cayman Island as basically a vessel only for the top 1 per mil to avoid taxes, when obviously this is a mechanism which you also use in Europe, which you can basically hold reserves in a company and so on. So it's beneficial for the companies, it can help. So what is there you thought about in this circumstance? So let's start with Andrey. Everyone, just please a minute. And I don't know if you have the same order than I have on the screen. I just go by the order by the screen through with the question. So Andrey, please start.
Well, I'm not a real expert in this question, why it's happening. But obviously, from political standpoint, politicians always need somebody to blame. It's a kind of usual game. And but also that's happening because of the global political landscape, because obviously there is the world is changing, and now you see how the introduction of the CBDC, right, in the global markets. Okay, from my standpoint point of view, I'm more looking at the mechanism and to learn more from the Cayman experience, how for the country like Ukraine, being in war, can introduce mechanisms that will help to rebuild Ukraine, which is $1 trillion opportunity. But the question is how to motivate investors by giving the incentives in terms of the tax incentives as well, in order to step in now during the war, not the post-war. So basically, if you look at this from this perspective, then you can do something in Ukraine as a test bed. And if it's good, then you can actually legally replicate that in other jurisdictions, they can also in the special whatever situation, etc., etc. So it's kind of more broader issue, how to use the different experience for the special territories. And I'm just using Ukraine as a very concrete example, right? Because it's not an island; it's 40 million the population country which is in war, but also the industry is performing. Believe it or not, but Ukraine been in war from 2014, but we have 8 unicorns and 2 happens last summer in the full-scale war because the industry is performing. And the question is how to attract the global investors also by setting up the local special tax and legal regimes in order for investors for some special situation to come in. So it's kind of more broader issue, which is kind of we need to find the balance, or it's just for the tax haven, or is for the necessity of the different territories to actually work with the investors and to attract them as well. So this is my take on it.
Thank you, Andrey. Kendra?
I'm trying to think. My dog's barking, so it's very.
Should we overjump you and give you a minute?
Yeah. Why don't you? I can.
Okay.
I'll gather my thoughts.
Okay, Julian.
Yeah, so I wholeheartedly agree with Andrey. I think that the issue is how do you create an environment in which it's possible to make investments in a cost-effective, tax-efficient way. So Cayman does that by having no taxes on corporations, which means that you can avoid double taxation. So you invest through structures in Cayman, whether it's a special purpose vehicle or a segregated portfolio company or some kind of insurance structure or just a private fund. And through that, you invest in activities in other jurisdictions. People don't hide their money in Cayman, right? They utilize these structures in Cayman, which have been developed, innovated, as Kendra points out, in response to perceived and actual demands from clients in other places. And they use these structures to make investments that provide more capital, lowering the costs of capital. And this is a crucial point that that Aldo implied. By lowering the cost of capital in other jurisdictions, you can increase the amounts that are invested. And by increasing the amounts that are invested, you increase the rate of innovation, whether it's in Ukraine or in Taiwan or in the United States. And as a result of those additional innovations, you get more economic growth. And with more economic growth, everyone benefits. So this idea that Cayman and other tax neutral jurisdictions that have specialized in other areas somehow harm people in other countries is completely wrong. It's actually upside down. And it applies also to investments in African countries. There are significant investments through Cayman, BVI, Jersey, Guernsey, and other tax neutral jurisdictions into Ghana and Nigeria, South Africa, and so on. And those investments enable people in those countries to do better. And they also, as Aldo points out, result in the generation of taxation locally, including corporate income tax. So Cayman doesn't take a second layer of tax, but it doesn't impair the ability of those countries where investments are being made to tax the companies that are operating there locally. Now, of course, over time, entrepreneurs figured out ways to reduce the amount of tax they paid by using all sorts of mechanisms. But those are mostly gone. And in any case, for a jurisdiction like Cayman, they were never a big deal because here we focused on the kinds of structures, funds primarily, which that just doesn't matter. It's just not an issue. So, hopefully that gives you an idea.
Just to give also the other people some time down, please.
Yeah, I agree because Cayman, for example, like the Delaware companies, even though the Cayman has no taxes, it doesn't oppose a tax because the other like the Delaware companies or other countries can lower their taxes and they can attract their same amount of clients, just like how Cayman is. Because actually, in my experience, I have already experienced, like I've had a client with a large portfolio, and even though Cayman fees were a bit higher, the overall structure was much more stable and secured. So they'd rather be here. However, there was another country that offered lower fees, and then they went over there with just a small portion of their investment companies that they had. So if we can put something, yeah, like I said, I agree. Put those in place, yes.
Thank you.
So sorry, I'm doing more of the compliance side of things, on the one-to-one with the clients. And I have clients that they come for a number of different reasons investing in Cayman. And they're doing both. So we are opening the doors. I don't think we're just limited. Thanks.
Thank you. Aldo?
Sure. Well, I would sort of focus on the why is Cayman in the sort of focus point, and I would sort of personal opinion ascribe it to deflection from the bigger powers, in that sort of globally you have an aging population. This is my hypothesis. You have a global aging population. Largely infrastructure is outdated and deteriorating. Capital needs to come from somewhere, or the money needs to flow from somewhere to maintain and improve. So, let's focus on the easiest target, which is the, global tax conversation, rather than coming up with entrepreneurial and innovative ways of generating capital and attracting capital to actually fund those needs. So
I think I can.
Did I hear just right when I summary is just that the politicians don't do their job right to attract a new industry, so they blame you? Was this what you just said, Aldo?
I think what I can just nuance it too, because
thank you.
I think that what he's saying also is that there are many places in the world that lack the rule of law, just purely are driven by corruption and kleptocrats that want to take for themselves and do nothing for their people. And so if we can extend the rule of law by enabling economic development in these places through a place that does abide by the rule of law and continues to advance in developing it, that's a benefit for those people, the people that are left out by the despots that are continuing to run these places, that won't advance on governance that is going to be helpful. Property rights, business contracts. I mean, the World Bank's doing business index and all these things that it's very clear what are the recipe, what the ingredients are. It doesn't, the ingredients of economic growth and are not, it's not it's an art and a science, but we know that some components of those things really need to be better throughout Latin America, Africa, and Asia, especially. So I think that's my opinion. I don't know that Aldo shares it, but I'm just jumping off of that. So
thank you so much, everyone. It was a really informative panel.